You only need to look at how many reports have been recently released by the IMF on CBDCs to know what their thoughts behind them are and how seriously they're taking them, with 5 reports put out just since the 21st of September 2024, all about central bank digital currencies. And I'll include a link to all of these in the description of this video if you wanted to check these out for yourself. Because as the payments landscape looks to evolve, with technological advancements due to the distributed ledger and blockchain technology that's found in crypto, CBDCs are being tested, piloted, and even implemented by many central banks around the world, as I did cover in a recent video that you can find a link to here and in the description. CBDCs are being presented as an alternative to traditional fiat currencies and digital assets such as stablecoins and cryptocurrencies, with the IMF promoting these, along with other international agencies such as the BIS, which I have covered several times on this channel. But they are all focused on one thing: encouraging central banks around the world to adopt CBDCs. So hi everyone, it's James from Coin Knowledge here, and in this video we'll be looking at what the IMF says about CBDCs in its recent reports, the implications, potential benefits, and what it thinks the risks are of CBDCs. Because on the surface, when we look at the advantages of CBDCs that the IMF report on, this might sound like progress, but is it really? Please do like the video and subscribe to the channel so I can continue to offer more content for you in future. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice or necessarily my opinion. And let's jump straight in and take a look at the IMF's plans for CBDCs globally. The IMF has been on a bit of a roll recently when it comes to releasing reports on CBDCs. And in this video, we're going to be summarizing the latest 5 reports, starting in September 2024 with a report called Central Bank Digital Currency Adoption, Inclusive Strategies for Intermediaries and Users, a blueprint for encouraging CBDC adoption. Then, the IMF released a report on the 2nd of October 2024 entitled Positioning Central Bank Digital Currency in the Payments Landscape, analysing where CBDCs fit among existing digital payment options. The 3rd report from the IMF was released just 2 days later on October the 4th, called Implications of Central Bank Digital Currency for Monetary Operations, focusing on how CBDCs could reshape central bank functions. The penultimate IMF report was released on the 11th of October 2024, called Central Bank Digital Currencies and Financial Stability, Balance Sheet Analysis and Policy Choices, examining potential risks to financial systems. And the final report was released on November the 8th, 2024 by the IMF, called Central Bank Digital Currency, Progress and Further Considerations, discussing CBDC cybersecurity, adoption and design. So that's 5 major reports in less than 2 months. And these are just the latest ones. Over the last few years, the IMF has been laying the groundwork, consistently advocating for CBDCs as the future of money. But the big question is, why? Why is the IMF so committed to pushing CBDCs? Well, let's take a closer look at what they're saying in these reports. Because at its core, the IMF argues that CBDCs are essential for modernizing the global financial system, with them highlighting 5 key advantages and benefits that they see of central bank digital currencies. Firstly, they highlight financial inclusion in many cash-based economies, with millions of people not having access to banks. The IMF believes that CBDCs could bring financial services to unbanked and underserved populations, allowing them to participate in the digital economy. By extending banking and payment services to those in remote areas or without formal identification or credit history, the IMF states that CBDCs can overcome traditional barriers to financial inclusion. For example, CBDCs could work offline, enabling transactions even in areas without internet access. Secondly, the IMF says that the CBDCs could reduce the operational costs associated with physical cash, or in other words, CBDCs would be cheaper to run. In many countries, the production, distribution, and security measures surrounding cash are expensive. So by transitioning to digital currency, central banks can reduce these costs significantly, particularly in economies where cash transactions are still dominant. This competition between CBDCs and traditional payment providers could therefore foster innovation and drive down the costs of payments across the economy, encouraging existing payment providers to offer better services at lower costs. Thirdly, the IMF touches on CBDCs being able to essentially act as a backup during disruptions to traditional payment systems, ensuring continuous access to money in times of crisis. They do state that cybersecurity is crucial here though, due to the vulnerability of cyber threats, and mention the importance of resilient designs and secure infrastructure, particularly for emerging markets with limited technical resources. The fourth advantage the recent IMF reports mention is that central banks could use these CBDCs as an additional tool to affect monetary policy and supposedly ensure financial stability. For example, they could influence interest rates more directly or manage money supply or liquidity. The IMF also notes that CBDCs could mitigate financial stability risks associated with private digital monies, such as stablecoins, which may not be as reliable during periods of financial stress. But they do say that CBDCs ensure interoperability between private and public money systems, which they say is an advantage. And the final advantage that the IMF highlights links with the second one that I mentioned on cost efficiency, but with this one specifically looking at cross-border payments, because CBDCs could make international transactions faster, cheaper, and more secure, potentially replacing systems like SWIFT in the future, with a focus needed for these CBDCs on access, compliance, and settlement standards across borders. And many people will say that we are building this system already through crypto, with this having many of the advantages that the IMF mentioned in this report, without the centralized control that it's looking for. But the IMF states that unlike private digital money, such as cryptocurrencies and stablecoins, CBDCs are state issued, ensure that they play a stabilizing role in the monetary system, particularly in jurisdictions with declining use of physical cash, that they mention trust in money and payments, and that they avoid the potential fragmentation of the monetary system if private digital currencies, such as stablecoins or cryptocurrencies, become more prevalent. So that very quickly brings us onto the risks of CBDCs that the IMF suggests, because for all their supposed benefits, CBDCs come with serious risks, with a lot of people understandably hating them. So let's break it down to 5 risks that the IMF does allude to in its recent reports. Firstly, one major concern stated is that CBDCs could destabilize the traditional banking system. For example, if people move their money from commercial banks to CBDC accounts, banks will lose deposits. This could reduce the funding available for traditional banking activities or services, such as lending, which in turn could hurt businesses and the economy at large. And this could lead to liquidity risks for banks, especially during financial crises where a bank run might occur. To get around this, the IMF suggests solutions like limiting how much CBDC individuals can hold, or by not paying interest on CBDC deposits. Secondly, CBDCs could give central banks and governments unprecedented access to and control of your financial life. For example, every transaction could be tracked and recorded. While the IMF does talk about offering partial anonymity in its reports, the reality is that larger transactions will likely be fully transparent to authorities. So balancing user privacy with the need for financial institutions to access data to prevent things like money laundering and to ensure financial system integrity will be key, with concerns that in countries with less robust privacy laws, this could easily turn into a tool for surveillance, no privacy, and therefore control. And that is the third risk of a CBDC, where governments control what you can spend your money on and therefore a lack of financial freedom. For example, with CBDCs, they could impose negative interest rates to force you to spend instead of save. They could restrict and ban certain types of spending, set limits on how much you can spend, or provide incentives on areas that fit their aims rather than yours necessarily, with this being called programmable money. And this is the largest concern about CBDCs for most people, with them potentially eroding the very concept of financial privacy and freedom. Imagine a world where every dollar you spend is tracked, where your financial behavior is monitored, and where governments or corporations can decide what you can and cannot do with your money. They could even then enforce social credit systems, punish behavior deemed unacceptable to them, etc., which does feel like a dystopian future, but maybe it's not. The fourth concern, highlighted by the IMF, is that CBDCs will become prime targets for hackers, requiring robust cybersecurity measures, but with no system being 100% secure, especially in emerging markets with weaker financial and technological infrastructure. And finally, the IMF does acknowledge that CBDCs will likely face competition from other digital assets, including stablecoins and crypto, which they admit have gained some traction, apparently particularly in regions with unstable local currencies. Strangely, and possibly ironically depending on how you look at it, the IMF report then goes on to state that CBDCs offer a safer alternative to these assets, potentially curbing their adoption in future, with CBDCs being more regulated. But they do admit that for CBDCs to successfully compete, central banks will need to offer compelling features and incentives, such as interoperability, security, and efficiency. So what's next with CBDCs? Well, the IMF isn't slowing down. They've announced another wave of research for 2025, with this focusing on the practical implementation of them, including cross-border functionality and adoption strategies. We also know that a lot of countries are testing, piloting, and even using CBDCs, as I covered in my previous video on CBDCs that I linked earlier, and that's in the description of this video should you want to check it out. It was interesting to see Trump, the new US president, state that he won't allow a CBDC in the United States, citing government overreach and possible restrictions on people's financial freedom and privacy, with him obviously being positive about cryptocurrencies like Bitcoin, which does go against the IMF's recommendations. So it'll be interesting to see what happens here moving forward. But one thing's for sure, in the future, it is important for people to educate themselves and advocate for policies that protect our privacy and financial freedom where possible. So that ends this video. And as always, I'd love to know what you think in the comments below about CBDCs. Just a reminder that if you are interested in more of a tailored approach to your crypto education, and you think you benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5 that I did a video on recently that you can find a link to here and in the description. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.